Well, hi everyone. Welcome to the Buffett and Beyond weekly video stock analysis. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week we're going over Apple Computer up 350% in 5 years. But the big question remains, can this stock or this company continue to run with the big dogs? And we're going to take a look at that right now. Now, these are remarks that came out just the other day as Apple came out with revenue and earnings. Now, we all know what Apple does, so we don't have to go over that. So Apple beats on revenue and earnings, but China sales are down 13% year after year. So that's a big drop. And consider that Apple beat earnings overall, so they're doing very well in their other areas. So here we go. Apple announced its first quarter earnings after the bell on Thursday, beating expectations. $2.18 a share versus $2.11. Revenue beat $119.6 billion. Yeah, that's with the B, folks, versus $117.9 billion. So there we go. Beat on the top line and the bottom line. Now, today, Apple is reporting revenue growth for the December quarter was fueled by the iPhone sales and an all-time revenue record in services. Now, we had heard rumors before these remarks came out that Apple was losing share, and it's been pretty flat over the past 3 quarters as far as sales and revenues go. So all of a sudden they're spurting ahead here. Now, Apple CEO Tim Cook, right in here, said in a statement that Apple will introduce refreshed iPads and Macs in March, which could help goose sales numbers for both business segments in the year ahead. He also said that maybe around June they'll announce or have big announcements on artificial intelligence improvements and possibly products. So that's going to be very, very interesting as we come along over the summer. So the question is, will Apple continue to run with the big dogs? And let's look at the numbers. And the blue lines are the average stock in our database and the average stock in the S&P 500. And the green lines are Apple. Now, these are 5-year averages. So the clean surplus return on equity, and remember what that is. It is not the traditional accounting return on equity. This is clean surplus. So in other words, the core earnings of the company, they're almost doubling the average stock. Now, what about net income? Now, net income are not earnings. Net income is earnings, traditional accounting earnings, minus non-recurring items and future liabilities. So again, Apple is way outperforming the average stock out there in investment land. And when it comes to revenue, double the revenue of the average stock. Now, again, these are 5-year averages. So we're going to do some comparisons here in the next few slides. Now, this is from, can Apple continue to run with the big dogs? This is 6 months ago. So as we look at 2024 and we look at the net income and we see this clean surplus return on equity. Now remember, the clean surplus return on equity for the average stock is about 13%. So, but to get into our growth portfolio, we like to see ROEs, clean surplus ROEs, around 20% or higher. And for 2024, this stock, now these are six months ago numbers, that ROE was falling from 21% down to 19.1% for 2024. But now we come to the other day, and all of a sudden now we have even projections for 2025, and of course 2024 are all projections, because what we got just a couple of days ago, beginning of February, and we're just starting the month of February, coming out with higher predictions going into 2024. So 2023 numbers just came out, and this is going to be raised a little bit. And 2024 numbers are being raised, and the projections for 2025, if we can go out 2 years, projected to increase over numbers that we heard just a couple of weeks ago. So what does that do to the clean surplus ROE? This is our bottom line number. Well, it raises the 2024 clean surplus ROE from 19% up to 21%. And for 2025, then it drops down under 20% to about 19.3. But don't forget, we have announcements coming out in March, which is just next month as I'm recording this, coming out in March, and also reports on their developments in artificial intelligence, AI, coming out probably around June. So we're looking at this stock. Does it continue to run with the big dog? And let's look how this stock has done in the past 12 months. Well, in the past 12 months, with the S&P up around 16, maybe close to 17% in here, this stock is up about 24%. Now, the 10-point difference in here, when you base it on the S&P 500, and that means when you put it into percentage terms that Apple is outperforming the S&P 500 by about 62%. So with the 24% return versus about a 16% return for the S&P 500, we can see, yes, we are outperforming the S&P 500. But don't forget that our 30 stock growth portfolio is up over 55% in the past 12 months. So Apple is actually bringing our averages down a little bit. So we have a quandary here. Yeah, we're outperforming the S&P 500. And remember, 96% of professional money managers cannot outperform the S&P 500. So you have most money managers that do not outperform the S&P 500. And don't forget, Warren Buffett has $1 million bet out there that the average money manager, and we're talking about the mutual fund people, they're the professionals that we can track on a daily basis, that they cannot outperform the S&P 500. And so far, he's winning that $1 million bet. So we want stocks in our portfolio that do outperform the S&P 500. Apple is certainly do it, but our growth portfolio really outperforms quite well the S&P 500, doubling it in many years, and over 22 years on a compounded basis, tripling the S&P 500. So is Apple actually bringing our returns down, even though it's outperforming most of the money managers out there? Good question, folks. And we won't know until we hear numbers in March and announcements in June by Tim Cook. So we'll see what Apple does. Now let's look over the past 5 years. Yeah, with the market up about 70%, Apple is up over 350% as we speak, and this does not have the other day's returns or yesterday's returns in it. And I'm recording this early in the morning, so we don't have today's numbers in here. But you can see how this stock has seemed to have leveled out in here. But so what? Look at this return in 2023. This is pretty nice, folks. And now we're just in the beginning of 2024, the first month. So, yeah, Apple does pretty good over the longer term, and it's been a staple in our portfolio for many, many years. So, folks, remember, our goal is to build your wealth faster and safer with better than average stocks. That's the goal that 96% of professional money managers cannot achieve, but we've been doing it by 3 times over the past 22 years. So, folks, remember, if you want to be on this beach, well, that's not a beach. We're coming from the beach. If you want to live like Jimmy Buffett used to live, then you've got to learn how to invest even better than Warren Buffett does now. All right, folks. Have a great weekend. Stay safe. We'll see you back here next week.